Hi everyone, it's Grace. Welcome back to my channel. In the last video, I provided you two very important parameters to give you an update of what the housing market looks like today. One is the migration pattern for home buyers, and the other one is the new housing permit. And this gives you two maps and also charts for you to understand what is going on in the housing market in the metro areas across the US. And you can click here to check out that video. So in today's video, we're going to talk about what the 75 basis point already did to the housing market. And this is a very important topic because the Fed is increasing the interest rate so aggressively, and we're seeing a lot of really interesting movement for the past month or so. Before we begin today's video, remember to subscribe to my channel and click on the bell button so you get notified immediately when new videos like this are uploaded. Also, feel free to give this video a thumbs up if you find it useful. Another way to support my channel is by donating any amount that you feel comfortable with, either through PayPal, Cash App, Zelle, or QuickPay. And I'll provide the links in the link tree down below. And this is a quick shout out to Arjan Giuseppe. Thank you so much for your support for my channel. All right, so let's get started. So before we go into the maps, I just want to recap on all the FOMC meetings that have happened in the first half of 2022. So there are altogether 4 meetings, and then in January there was no Fed rate hike. Then in March, May, and June we're seeing 25, 50, and then 75 basis point. So you can clearly see that there is an incremental pattern. And what I think the Fed is doing is trying to test the water to see what is the impact of the federal funds rate on the market, including the housing market. So based on the observation for the past month, especially in June, we're seeing that 75 basis point is very aggressive because it slows down the mortgage rate purchase so much. And it's also cooling the housing price in some of the areas and also increasing the inventory change as well. So we're going to see those things happening in today's maps. So in the July FOMC meeting, which will happen tomorrow and a day after tomorrow, what I'm seeing is that another 50 to 75 basis points will potentially happen in that meeting. This is because the CPI in June was 9.1%, so it was really bad. And the Fed has the responsibility to bring down the inflation. So that's why I think that 25 basis point is really not enough. Right. And then there are also discussions that 100 basis point or even 125 basis point will take place. I think that's more speculative because 75 is already very aggressive. All right, so now let's take a look at the maps. For those of you who are new to my channel, the color legend here basically has 2 sides. The blue tone means that the inventory is decreasing and it's negative, and the yellow tone means that the inventory is increasing and it's positive. And the middle section is 0. All right, so just by glancing through the map in general, you're seeing that the majority of the metro areas are displaying in the blue tone. That means the inventory change are negative and they're decreasing. So that means that the inventories are still not picking up with the demand. And this is from May 2021 to May 2022 on the last day of May. So this happened after the 50 basis point took place in the May FOMC meeting. All right, so let's go to see the June map, and you're going to see a very, very clear difference. All right, so this is the May map. And then if we're switching to the June map, you're clearly seeing that there are a lot more metro areas that used to be blue, but now it turns yellow. And that's a very telling sign. And this is from June 2021 to 22. Also on the last day of June. So this basically happened after the 75 basis point increase. And you're seeing that some of the areas used to be a blue tone. That means that it used to be negative. And then after the 75 basis point, it becomes yellow. So it's increasing. And that's a very, very telling sign. That means that the 75 basis point is taking effect. In a way that I think that the Fed wants it to happen, because the housing price or the pricing strategy is out of control. It's completely out of whack. And then if we're switching to the price year-over-year change, this is for May, right? And then this is for June. So you're not seeing like a huge difference in the price change. So the price change is definitely a bit more sluggish. That means that even though the inventory is picking up really quickly in many of the metro areas, as we saw for the past two maps, housing price is still increasing. And then we're seeing like in some areas the tone is changing, or if it used to be like darker green, it becomes lighter in hue. So this gives you a pretty good idea like which area is more susceptible to the 75 basis point and which ones are not reacting as much or reacting the opposite way. All right, so this is a very interesting situation. So you should know from these four maps that the 75 basis point or the Fed rate hike, the aggressive rate hike, has more of an impact on the year-over-year change in housing inventory and not really that much on the housing price. All right, but we're going to discuss more in detail of the housing price parameter. So in the next part, I'm going to give you a more detailed analysis of why there's such a big change in the inventory year-over-year basis, right? You're seeing that a lot more places are displaying in the yellow tones, so that means that the inventories are picking up like really, really quickly. All right, so the first thing that I'm going to do is to, pick a random place, right? So this time I'm going to do the Las Vegas, Henderson, and Paradise area. And you're seeing that from last June to this June, the inventory picks up by 9%. All right. So the next thing that I'm going to do is go to Zillow and type in Las Vegas in Nevada and just browse through this listings quickly. And then I'm seeing like price cut here and there. And for this analysis, I'm just going to pick like a random listing and going to see what is the pattern of the pricing strategy. So for this property, it's priced at $425K, and then this is for a 5-bedroom and 3-bathroom, and then it had a price cut of $25K. All right. So when we're looking at the pricing history, we actually saw that this property was actually sold back in 2019, so that was just before the pandemic hit, right, at $299K. So that's basically $300K, and then it's listed for sale again at the beginning of this month for $480K. So that's basically a 60% price increase. All right. So when are scrolling up a little bit to see the price change for, the past few weeks, it's actually decreasing the price little by little. It's not like all of a sudden it's decreasing by 10%, 20%, right? So what does that mean? That means that the sellers of the properties, not just for this area, but also for a lot of other areas where the inventories are picking up, are acting according to what the Fed is acting. And that's very interesting. So what does that mean? Obviously, I'm not familiar with who the seller is and who the buyer is for this particular property. I'm just saying that this type of behavior is very common, right? So the person that bought this property bought it for $300K, right? And the person could have bought it with loans or all cash, but for whatever reason, this person bought it before the pandemic. And then, if you remember, there was actually a Fed rate hike cycle before the pandemic. And then 2 years later, there is another rate hike cycle, which is the one that we're seeing right now. So the Fed rate hike cycle is actually very, very important to the adjustment of the asset value. So what does that mean? For example, if this person bought it for $300K all cash, that means that there is at least $300K equity existing in this type of property. And then after the Fed rate hike cycle, after the Fed funds rate dropped to the bottom, a lot of people already with assets, including this one, become very, very rich. All right. So basically just priced at 480K, the person is expecting a 60% return on the equity. And then because the interest rate is increasing right now, it's slowly decreasing the price little by little because the interest rate is increasing and the mortgage rate is increasing, right? So does that mean that this is a mortgage loan related type of housing crash? Not necessarily. The seller might just be a little bit more realistic in terms of the return on equity. It might not be 60% return on the equity. It might be 58%, 55%, or something like that. Whatever it is, the seller is still making a profit, right? So that's what I say when the inventory is changing, right? When the colors are changing, the sellers who already hold the asset for 100% equity might just be a little bit more realistic, right? So this is definitely one of these scenarios. And then another scenario obviously has to do with when the person who bought this property, for example, he or she bought it for 20% down, and after the pandemic hit, the asset price ballooned like really quickly. So the equity increase surpassed the speed of the mortgage rate repayment, right? So maybe the person just wants to recoup the cash or get out of the situation really quickly. So it really depends on the situation. But just from this pricing strategy, what I'm understanding is that this is probably not a down payment homeowner. I think that this type of seller is holding all cash and being more realistic in terms of the equity return. Because if you want to get out of the situation quickly, you don't want to be in bad loans, and you need cash, right? You need liquidity. This type of pricing strategy would be aggressive, like not even 10% is enough, maybe like 20% or even more, right? So you have to like go into the price history for listing just to understand a little bit more of what is happening. So for some of you who requested the videos to be a little bit shorter, I think it's a great idea. So I'll leave the rest of the analysis for the next video, where we're going to go into details to see what is the pricing strategy for the sellers as well as buyers in this particular macro environment. And we're also going to talk a little bit about housing affordability issues, the crisis, and also my take of what is a good solution for that. So the 4 maps for today's video are already published on my Wix site as well as my Tableau profile, so you can take a look by yourself. All right, so thank you so much for watching today's video and also your support for my channel, and I'll see you on the next one.